Here we are once again at the Gold and Silver Summit in the financial district of downtown San Francisco. Now we're going to talk about the real yellow metal. I'm here with Amir Adnani once again.
Hey, Mickey.
Chairman of the board of Gold Mining, Inc., a gold bank accumulating gold projects.
Very proud of the team and our, just our ability to take maximum advantage of this bear market. Mickey, this bear market that we've had in precious metals and gold that started in 2012 will go down in history as one of the longest, toughest bear markets that we've had in decades.
Well, it certainly, I think, is the longest.
It's certainly the longest.
And I lived through the Bre-X scandal, and no, I don't think it was as deep as Bre-X, but it's been longer.
It's been longer, and it has really been a war of attrition. A lot of companies have had difficulties financing, and it really, when I look back, I can really say that we have taken full, maximum advantage of this unusually long bear market. By standards of the last few decades, this was it. So, it's amazing to be able to look back and say, we took maximum advantage of that. We were out there buying these projects, sticking to our thesis, and our thesis being, if you can buy resource stage projects for less than their discovery costs, for less than the money it's going to take to go drill a new ounce of gold in the ground, that should be your focus. And if it's, and I don't know what the threshold is, maybe it's 1,300. If gold is below 1,300 and you can buy for less than discovery costs, then do it all day long. Quality projects, of course, good jurisdictions, endowment has to be there for further upside, but if those characteristics and boxes are checked, do it all day long. And when the gold price goes over 1,300 and it's in that sustained uptrend, guess what? You can be an aggressive developer because now you have the pipeline. And so when you look at that, honestly, it takes a lot of discipline, Mickey, I think, to say that's the strategy and stick with it. And I'm grateful for a lot of supportive shareholders, including yourself, who from day one, I mean, you've been a shareholder since pre-IPO.
Yep.
Have basically, put the money behind our concept. We've gone there and executed. We've put a lot of our own money into the business to demonstrate how aligned we are. I mean, insiders in gold mining own almost 25% of the company, so significant insider participation. And I think we're going to look back and say this was an incredible, once-in-a-lifetime type of window to aggregate this many projects, this many resources, at a time as well that you have mentioned some interesting trends to me, at a time when it's getting harder and harder to find new gold resources.
Well, you came up with this number and I was surprised by it. The cost of discovery per ounce is now $45. $45 an ounce to explore and put ounces into, I presume, a resource category, right? And so I pulled one on you because a couple of years ago we published a piece and we compiled 253 acquisitions from 1990 to 2013. The average cost per ounce paid, cash cost, $45 an ounce.
Okay.
And so I look at gold, and most of those acquisitions have been, at least since 2015, for shares, just 3% dilution here, 3% dilution there.
Yeah.
And I think you still got 15 million bucks of cash in the bank, and you've got warrants that you and I both hold that are in the money, expire in 2010 or 2020, pardon me.
That's right.
And those in the money warrants are worth
another $6 or $7 million.
$6 or $7 million bucks. So you're well set for cash. Another thing that impresses me is the liquidity.
Right.
That's impressive, Amir.
Well, I appreciate that. Listen, I think liquidity is really important, right? Because and that's what, I'm glad you bring it up, because the fact that the company has gained and garnered such a wide shareholder base that translates to the liquidity. First of all, is a vote of confidence. It's a validation of the model that despite the difficulties in the gold market, we've managed to build a very extensive and diverse and really across the world. Like you mentioned, our listings in Europe and Canada, US. This has helped facilitate the development of a large shareholder base that has then allowed us to have the liquidity in the company and in the stock to underwrite our own acquisitions. So when we've gone out there, as you say, to, in the last 5 acquisitions have totaled about $70 million, we've managed to basically underwrite these acquisitions with our own shares that we've issued for the acquisition, at a time when maybe it would have been very dilutive to go raise the money with warrants and discounts and things like that, right?
And that's the way most companies function, and they end up with blown out share structures.
Exactly.
You don't have that.
We don't have that, and to have 130 million shares out, but with such a large and diversified resource base, as you point out correctly, with the cash position of just under $16 million, another 6 or 7 million of in-the-money warrants, this company is in excellent shape. I mean, I honestly can't think of another pre-production gold company out there that has zero debt. And this is a very good position to be in. And it goes back to timing. It goes back to taking full advantage of the timing in the market. Bear market acquisitions leads to opportunities like this, but the keeping the dilution low. Like you said, if you look at the 3 acquisitions we did this year, each one was maybe a 3 to 3.5% type dilution.
Right. Yep.
That's what drives the value.
Total.
That's it.
If my numbers are correct.
That's it.
And the other thing that impresses me, and it's from what I would call a contrarian point of view, and I'm a contrarian when it comes to buying stock, if we do a per ounce calculation, and I'm going to do this in my head, in US dollars, we usually think, because it's Toronto listed, in Canadian dollars, but 131 million shares. I think it closed today $1.10 US.
Yeah.
That's about $140 million US market cap.
That's right.
And you got close to 20 million ounces total, and you've got some resource estimates coming.
That's right.
That was going to up that. That's $7 an ounce. So let's go back to $45 an ounce to acquire, $45 an ounce to discovery. This company looks like it's got some upside to it to me.
I won't say more. I think you summarized it eloquently.
Yeah,
I agree with you.
You don't have to make any forward-looking statements. Let me do that here. So
listen,
but
I think,
my gosh, this looks compelling to me.
I think the timing looks very compelling. I think that's why earlier today you were at a luncheon here in San Fran where you saw one of our largest shareholders, Katusa, Amir Katusa with KCR funds. They've owned almost 15% of the company since 2010. Basically get up and say what you just summed up. Basically that he sees this as one of the best ways to get exposure to gold and to have that upside and leverage to gold. You've got 3 analysts covering the company basically agreeing and saying the same thing. So I think there's also some common thinking out there along the lines of what you're saying. But Mickey, again, let's not forget that the key trends in the gold sector today really come back to the ideal positioning for gold mining. You and I both know the low-hanging fruits, the easy deposits, the high-grade deposits have been mined out. The average grade of gold being mined in the world is on a decline. It's not increasing, it's decreasing. And deposits are getting deeper, and again, they're getting harder and harder to find. And so when you look at the fact that the gold industry today is sitting at a decade low of gold resources and reserves, when you look at the fact, like you said, that it's costing north of $40 to find a new gold resource, and that's after time, money, risk to go look for it. I love the fact that we're sitting on a large gold resource base and waiting for the market to come to us ultimately. This is all about positioning, it's about patience and execution and sitting tight.
It's a gold bank. It's really what it is.
That's it.
Yep. Buy advanced projects, and we've seen companies be very successful with these banking of projects that are acquired in bear markets, and looks good to me. Looks like the future is very...
The future is very yellow, but as you know, with gold mining, we're not just sitting on an exciting portfolio of gold assets. I think you've always been intrigued with the other yellow metal that we also have exposure to in gold mining.
Well, I forgot about that. Yeah, thanks. I'm supposed to lead you in, mate, and you're leading me into a question that I forgot to ask you, and that's You're in the uranium business with Gold Mining.
We didn't mean to. We didn't mean to. And a lot of people may not be familiar with this because you and I haven't talked about it this year. But in 2013, when we acquired a company called Brazilian Gold Corp, they had a uranium project which we considered non-core. They considered non-core. But at the time, we were sitting on trend with basically nothing. And that area that we were situated in is Western Athabasca Basin. And since that acquisition of Brazilian Gold Corp, Fission and NextGen and a handful of other companies have had tremendous success in Canada's Western Athabasca Basin. And our project happens to now be a situation where it's a joint venture with Areva, the French nuclear company.
Yep.
They own 25%, we own 75%. It's the largest land package in Western Athabasca Basin, about 125,000 acres. We used to be sitting on trend with basically $100 million of combined market cap. Now we're sitting on trend with $1.3 billion of combined market cap. And so this is a non-core project for gold mining, but obviously we're quite fluent in the uranium language. And we're excited about the upside in uranium prices that you and I have talked about. So for gold investors, I really can't think of another place where you can get your full dosage of gold resource in the ground, but with a nice flavor of uranium in terms of that optionality and leverage that the Rhea project represents. At $20 uranium, we've just held on to the project and maintained it. At $25 uranium approaching 30, this is a value driver. This will add value to gold mining. And for a lot of gold mining investors, whether we spin this out or sell it, we'll figure out the best way to monetize it. It gives you that extra kicker of exposure to the other yellow metal, while you have this incredible leverage, in my opinion, to a very large diversified gold portfolio and a very strong treasury, which is always key in this business, to have a strong balance sheet. And of course, as you know, insiders that have a lot of skin in the game, and we're patient. At UEC, I've been at it for 12 years.
Have to be.
You have to be patient, and you got to be able to get the job done. At gold mining, we're only 7 years into it, but you have to only look at what we executed at UEC. When it was time to go into production, we transitioned UEC into production. When the time comes for gold mining, maybe we'll do that, or maybe the company becomes a big target for M&A. We'll see how it plays out, but it's key to be in the driver's seat, and gold mining is in the driver's seat. We have options.
Multiple exit strategies.
That's
I love that. Folks, I think we've told you some reasons why you might consider becoming a shareholder of Gold Mining Inc. You probably know that I am a committed shareholder. I want to thank Amir once again for sitting down and talk to us, and take a look. Listed on the Toronto Venture Exchange as GOLD. I think you probably realize why I'm a shareholder. As a contrarian, perhaps you would like to be a shareholder. It also trades on the OTCQX as GOLD.
GLDLF.
Okay, GLDLF. And take a look, folks. Ciao for now.